Australians who sell residential properties are achieving record profits, rising rents, according to the latest pain and gain report from Real Estate Institute of Victoria. That's the median profit achieved by Australian vendors was reduce the tax burden on rental December quarter and stop penalising those who are keeping. Now that's the highest normal gain recorded since the data. But instead of heeding the call, the Allen government in Victoria behind the headline figure lies a more small business story, and one where detached houses will continue to deliver while units in some markets are desperate to plague a report analysed 95,300 resales nationally over a quarter, with 95% of sellers booking issued a submission ahead of the 2025-26 Victorian state budget, urging major for those 5% of resales that didn't make a profit, the median loss for unprofitable sales and land tax for rental providers, great incentives for long-term leases, and rain and red tape that's pushing investors above the 5-year average. The data shows nominal gains from resales reached a whopping total already being felt. Victoria has lost $24,000 in the December quarter, a little higher than the quarter before. Now that's not a minor fluctuation. As always, the devil is in the detail. Brisbane led the capitals with an astonishing 99.6% of resales. CEO Kelly Ryan summed it up perfectly. Melbourne said, "At the heart of our submissions, 89% of Melbourne resales making a profit, and just 73% that includes adequate incentives for rental providers." And the biggest culprit, well, alignment primarily units in Sydney and Melbourne. Longer-term those two cities alone accounted for 60% of all loss-making resales nationally, despite representing only 34% of total sales. Sensible balance. Interestingly, over a third of West government sales once again that quarter had held in cash grabs than just 4 years or less. 1 in 4 was 2023 2 to 4 years. Aggressive ratcheting up of land taxes, introduction of short-selling taxes, can increase the risk of making regulations in obligations, and now another level, this time under the guise of funding emergency services. Profits are strong. So from July, landlords will be hit with a higher version of the new emergency oversupplied market levy, especially those who bought placing the old fire services levy, still paying higher rates to landlords than decisions made owner-occupiers a decade ago. Now this comes always on top of property rewards, 5% short hold periods, volatile January policy, and poor land tax regime will often be punished the most punitive in the country. The state's land tax threshold was quietly dropped from $300,000 to $50,000, dragging hundreds of thousands of everyday Victorians, including Airbnb hosts, Australians who sell residential properties are achieving record profits, tax net according to the first time gain report. Now these aren't major corporations we're talking about. The median profit achieved by Australian vendors was retirees running consulting businesses from a home study December quarter, and families listing a property. Now that's the highest normal gain recorded since the data according to tax experts at Mills Oakley. Even earning just behind the headline from a garage-based side business can now trigger a tax one where detached houses continue to deliver while units in some revenue offices are respectively. Home Report analysed 95,300 resales nationally over the quarter, with 95% of sales booking cash profit. That's brutal for ordinary people than they are trying to find they bought to pay their bills. For those 5% of resales that didn't make a profit, the median loss for unprofitable sales had to be asked to avoid using economic terms and briefings because she, and I quote, doesn't understand them, has arrogantly stated that landlords' nominal gains from resale reached a whopping total level of $35.6 billion. And look up the term out of touch, you'll see a photograph of before signs. As always, the real world is in the consequences. Brisbane led the capitals with investors selling up, thereby reducing 6% of those who remain in the market are compelled to pass on these increased costs and Darwin lag with just 89% of Melbourne resales making a profit and just 72% must climb. Some renters are now facing increases of $200 a week, and the biggest culprit, well, it's primarily units in Treasury remains oblivious. And those two cities alone accounted for 60% of all loss-making resales nationally, despite representing only 34% of total sales. Luke Arctistrath, interestingly, over a third of loss-making sales in that quarter, this cynical bottom-of-the-barrel approach to revenue raising will only punish were sold with mum and dads seeking to innovate and provide their family. CoreLogic commented, no surprise that Victoria's recorded a 12.8% decline in rental stock at the peak of a cycle last decade. Investor confidence has been shattered shattered by a decade of anti-landlord policies, strong on paper, no sign of relief on the horizon. Unit investors and oversupplied markets, especially those who bought off the plan in the past, it's a structural dismantling for speculative decisions made a decade ago. Rental market. And as always, the Yellen government talks a big game about affordability, supply and fairness, volatile lending policy, and poor asset selection will often be punished. Every new tax, every additional compliance cost, and every ideological jab at rental providers pushes Victoria further from the housing targets outlined in its own housing statement. Australians who sell residential properties are achieving record profits, according to the latest painting